Okay, so let's continue our journey in the area of inventory accounting and start focusing on our first subtopic. I hope that you have already looked at the basic video that we had done before this particular session that you're looking at now. Well, the topic in this that we got to cover is how to calculate the effective landed cost. Okay, sounds a little heavy, but I want to just kind of put things into perspective. And the concept is very simple. If you go and buy a particular thing, of course you have to pay something to the supplier. But in addition to that purchase price, the price that goes out of your pocket into the pocket of the seller, there is, or should I say, there are other expenses incidental to this transaction. So those, incidental transactions could be, the transactions of transportation, the activities related to payment of some taxes, your parking, your, anything related to the basic purchase transaction. Now, the point I'm driving home is that when you say that, and for the purpose of your accounting, you say that my inventory has costed me X rupees. This X is not the amount of purchase price. It is sum total of everything bundled together. So welcome to the concept of the landed cost. The landed cost, it's a little rhetoric, here it sounds like, when the inventory lands, but by the way, that's actually the best way to understand how much total money I have to shell out to ensure that the inventory lands at the location where it is required. So in context of raw material, remember there are three terms: raw material, WIP, finished goods. So in context of raw material, the desired location is the raw material godown. That's where my raw material is usable. In context of finished goods, the desired location is the finished goods godown, because that's the place where a truck or a distributor is going to pick those up. So that's the broad paradigm that under which I'm going to talk about, and it's best understood with help of a simple a value chain. Typically, and of course, in case of import transactions, this could be a little more complicated. But here is a very very simple value chain that you might want to use. That here is a supplier supplies some kind of a raw material. We manufacture goods. This is our factory. My raw material go down is here, and my finished goods warehouse is here. And from here it goes to the customer, and you have outbound logistics and all. So typically, just to kind of settle some noise, this is called as inbound logistics, and this part is called as outbound logistics. Fancy names. Basically, logistics is the transportation plus warehousing plus insurance, all put together. Anything which ensures that the goods are safe when they are under the sun. Okay, so that's a very simple value chain. Now coming back to the concept of landed cost, the supplier is going to charge $100 from me. Let's assume it's an imported supplier, and so the person is the seller is based out of US. So this is the cost at his shop, but I can't use that raw material. Let's say these are steel coils, so I can't use the steel coils at his shop. I have to bring them to my factory at my raw material go down. So whatever amount of expense that I incur here in this exercise, be it an import duty, be it some kind of transportation from the port to my factory, let's say in Gurgaon, or be it the unloading of that raw material so that the raw material reaches the godown, anything, 100 plus X plus Y plus Z, all of that put together is going to be the landed cost of the raw material. I would include everything put together, which means you're absolutely right that the transportation that I have paid is actually part of my raw material. Therefore, in case in an income statement, you happen to see transportation or distribution charges, those are typically the distribution charges which are incurred on finished goods, because the inbound ones are automatically part of the raw material consumed. Okay, so that's also a good learning. Now, what happens in the factory is a lot of labor and other expenses are incurred. We typically call them conversion cost. Okay, the name's very commonsensical. So 100 plus x plus y plus z, and let's assume the conversion cost is about 40. So, and let's for the sake of simplicity, we assume x plus y plus z is again 50. So 100 plus 50, 150 is the landed cost of raw material. On that, I have incurred 40 more. So 190 is the value of my finished goods. So again, the concept is I'm going to add the value. While if someone asks me how costly is the production of finished goods to you, I'm saying I have incurred 190. Everything to bring the finished goods at the place where it is usable. So my place of use for finished goods is this warehouse. Of course, this warehouse would have some kind of a storage cost, like a rent. Assume that this is warehouse is on rent. Now, the question is, would you include the rent of the finished goods warehouse? Answer is, if you think, enough, you would be very clear. Are the goods stored first or are the goods manufactured and ready first? Of course, they are ready first, and then they are brought to the to the storage place. That means, let's say the storage cost of 10 will not be included here because storage is done after the goods have become ready. That means I will stop adding any further dollar, any further rupee, any further value to the inventory once the goods are, I'm going to use the word, ready for sale. Okay, this is the litmus test as far as the finished goods are concerned. Hold this tight. It's going to make a lot of matters very, very simple to you. Okay, so commonsensically, if you just visualize, in inventory, you got to visualize a lot, people. If you visualize, what are the kind of things that have gone into the finished goods? There are certain raw material costs, there are certain conversion costs, there are certain taxes, perhaps, there are certain anything related to the finished goods in the factory. But do you see one important point here, people? That overall administration cost, sometimes called as general expenses or admin expenses, things like those, admin expenses are never part of inventory cost. Similarly, distribution, similarly, marketing. These are all expenses which are never part of the inventory because we believe these costs have no role to play in producing the inventory. What you are looking at is the product cost. Okay, that does not mean that I am disowning these costs. Of course, these are my costs. Where will it go? They will directly go to P&L. I would want you to quickly recall the concept of expense recognition, wherein we said there are two types of expenses, one related to inventory, the other one related to time. Okay, the ones related to inventory we said are the direct cost. They will be matched with the output and they will enter the P&L once, and they will enter the P&L as COGS once the corresponding inventory is sold. The other ones are time based cost. They will enter the inventory at the expiry of the time, so like rent or salary or whatever. So people, admin, distribution, marketing are all here. Factory cost mostly are here. Okay, but there of course are finer aspects here. Okay, so I'm going to look at some slides like these, where you have some content written, although I have covered most of it, but there are still certain things that I would like to take through examples, such as the point here, allocation of fixed production overhead, such as rent for factory. Now rent for factory has both the features. First, it's fixed, and since it is of factory, it's a production expense. Now, would such a thing, would such a cost, would such an expense be part of inventory? A yes and a no. A yes, because it's part of the factory, therefore production process, but a no because it is not related to each specific unit. So what does the rule of accounting says? I'm going to look at it in my live class, and this point is going to be very similar to this point because it says the allocated portion, I'll tell you how to calculate this, will be part of the inventory, whereas unallocated will directly hit the P&L. Okay, Like we said, storage cost, admin cost, selling cost are never part of it. Another important point you got to keep in mind, that any abnormal waste, and this is true not only for inventory, for every valuation concept, that whatever is abnormal is never included in the cost. That's what disrupt the overall sustainable cost structure. That's broadly the point here. Okay, and I would also illustrate some of the A is equal to L plus C concepts while taking up a live example, right? So people, I am all excited to meet you in the live class with a little lengthy example which will have a lot of application things, and I will also apply these concepts to Maruti and HUL like I had promised in the previous video. I'm very excited to meet you there. Looking forward.